seen some changes and new trends in the last 12 months. The first one is with respect to the new funds in the market. I have seen a lot more sector-focused funds. Among those, healthcare and fintech funds are the most popular ones. So the second trend I have seen is single asset fund, co-investment fund, and separate funds continue to be very popular. The third trend I have seen is debt funds are on the rise. I have seen a lot of private equity firms raising their debt funds for the very first time. And the third trend I have seen is for many Chinese managers who historically only had RMB funds now are raising offshore funds. This is because of the recent RMB outflow restriction and the Chinese managers' strong appetite for overseas investments. If they have US dollar funds, they can deploy US dollars directly in those overseas investments without any PRC-related approval. I don't think that had affected good Chinese managers much. This is because great Chinese managers managed to get capitals from other types of investors. Notably, I think the rising Chinese institutional investors have contributed a lot of capital to top Chinese managers, both to their RMB funds and offshore US dollar funds. The government has so much money right now. So I think for Chinese fund managers who only invest in PRC domestic companies, some of them are just focusing on raising and managing RMB funds only, even if historically they have had US dollar funds. But right now, raising RMB funds from institutional investors can be quicker and faster and more efficient. In my view, investment allocation and transparency with investors are the key questions. We always encourage Chinese managers who have both RMB and US dollar funds to have clearly defined investment scope in each fund's fund documentation to the extent possible. So, however, that sometimes it's just difficult to avoid any overlapping. So the next question the next issue they should focus on is to have a investment allocation policy. When there is conflicts or overlapping, they will be guided by their investment policy, and they shall disclose how they decide to allocate opportunities to LPs or to the advisory committee. First, there is a rise of Chinese institutional LPs, including Chinese insurance companies, sovereign funds. Now I've seen a lot of commercial banks, financial institutions, asset management firms, wealth management firms. They are all very active. In terms of exposures, in addition to the PE and venture fund, I have also seen their strong appetite for private equity real estate fund, infrastructure fund, debt fund, and natural resources fund. So it's very diversified.